Welcome to Pip Insight Macro, the economic calendar briefing for the daily Forex news. Today is the 17th of July, 2026. This session has 0 high-impact and 2 medium-impact releases coming up. Let's run through exactly what's on the calendar and what it means for the major currency pairs. We've got 8 economic releases crossing the wires today, and we're watching closely for any surprises. Welcome to Daily Forex News on Pip Insight Macro. We're tracking 2 medium-impact events hitting the calendar, with our eyes firmly on euro pairs and some key US housing data. Stick around as we break down what matters for your trading day. Here is the full economic calendar for the Daily Forex News. Let me walk you through each key event and what it could mean for the markets. We're watching the preliminary University of Michigan consumer sentiment reading today, a key gauge of how American households are feeling about the economy right now. This figure matters because confident consumers tend to spend more, which directly supports economic growth and can influence Fed policy decisions. A beat above the 51.0 forecast would signal improving household confidence and typically strengthens the US dollar, as it suggests stronger economic momentum ahead. Conversely, a miss below expectations could weigh on the dollar, signaling weakening consumer optimism and potential headwinds for growth. The market reaction hinges on how this data reshapes expectations for inflation, spending, and ultimately interest rate trajectories. Euro-dollar, pound-dollar, and dollar-yen are the most sensitive pairs to this release, with a stronger than expected sentiment reading generally favoring dollar strength across the board. Euro-dollar and pound-dollar will likely see the heaviest two-way action, as a positive sentiment beat supports US dollar strength and weakens these major crosses. Dollar-yen and dollar-Swissy typically move in the same direction, with risk-on sentiment from positive data generally pushing these pairs higher. We're tracking the preliminary University of Michigan inflation expectations report today, a key gauge of how American consumers view future price pressures in the economy. This data directly influences Fed policy expectations and can create meaningful volatility across major dollar pairs. The University of Michigan survey captures consumer sentiment on inflation, and when expectations rise, it typically signals stronger dollar demand as markets price in potential Fed rate hikes. A beat on this figure, coming in above the previous 4.6%, would suggest consumers are more concerned about future inflation, likely pushing the dollar higher across the board. Conversely, a miss below expectations would indicate cooling inflation concerns, potentially weighing on the dollar as rate hike odds diminish. We'll be watching for any surprise moves in the first 15 minutes after the release, as this data feeds directly into broader monetary policy narratives. The medium impact rating reflects its influence on forward guidance and risk sentiment rather than immediate GDP or employment effects. Euro-dollar and pound-dollar are most sensitive to this release, as higher US inflation expectations widen the yield differential favoring dollar strength. Dollar-yen and dollar-Swissy also respond notably, though the safe haven flows on risk-off moves can create competing pressures in those pairs. We're looking at the Eurozone current account data this morning, which measures the flow of goods, services, and investments between the Euro region and the rest of the world. While this is a lower impact release, it still provides valuable insight into the economic health of the currency bloc. The current account came in at 18.1 billion euros, up from the previous reading of 15.7 billion, so we're seeing a modest improvement in the Eurozone's external position. This suggests stronger export performance or reduced imports, which is generally constructive for the euro. However, with a low impact rating, we're unlikely to see dramatic volatility, though any surprise moves in the pair could still develop if the data surprises traders positioned ahead of other major releases. Euro-dollar will likely be your primary watch here, as it's the most widely traded euro pair and typically the first to react to Eurozone economic data. We're looking at the final core CPI year-over-year reading for the Eurozone, which is the inflation data that really matters to central banks because it strips out volatile food and energy prices. This is our last look at inflation before we get fresh monthly data, so let's see if it confirms the trend we've been tracking. The forecast is holding steady at 2.4%, matching the previous reading, which suggests inflation pressures in the Eurozone remain stable and well anchored. Since this is a final revision with no surprise expected, we're likely to see a muted market reaction. Traders have already priced in this data point during the preliminary release. Any deviation would be minor, but it does provide confirmation for ECB policy expectations going forward. Euro-dollar will be the primary pair to monitor, as any inflation surprise could subtly shift ECB rate expectations relative to the Fed. We're looking at the final CPI year-over-year reading for the Eurozone, which confirms inflation momentum heading into the new trading week. This is our last look at consumer price data before we shift focus to other economic drivers. The forecast is holding steady at 2.8%, matching the previous month's reading, which suggests inflation pressures in the Eurozone remain stable and relatively contained. With a low-impact designation and no surprise expected, we're likely to see muted market reaction, though traders will still file this away as confirmation that the ECB's policy path remains on track. Any meaningful moves would be limited to short-term noise rather than sustained directional shifts. Euro-dollar typically shows the most sensitivity to Eurozone inflation surprises, though we shouldn't expect significant movement on an inline print. We're looking at foreign securities purchases data out of Canada today, which measures how much Canadian investors are buying foreign stocks and bonds. This is a key indicator of capital flows and investor sentiment toward international markets. The forecast came in at $15.21 billion, down significantly from the previous reading of $46.91 billion. This represents a notable pullback in foreign investment activity by Canadian investors, though given the low impact rating, we shouldn't expect major volatility. Markets will likely digest this with a measured response, potentially reflecting slightly weaker demand for foreign assets. Dollar Canada will likely be the primary pair to watch, as capital flow shifts can influence Canadian dollar strength relative to the greenback. We're looking at the US building permits data for today, which measures the number of new residential construction projects authorized by local governments. This is a forward-looking indicator that gives us insight into future housing activity and overall economic health. The forecast is coming in at 1.40 million permits versus the previous reading of 1.41 million, a slight decline that suggests modest softening in construction demand. With a low impact rating, we're not expecting significant market volatility, but any large surprises could spark brief reactions in dollar-sensitive pairs as traders recalibrate their views on US economic momentum. Euro-dollar is typically the most responsive to US housing data, as building permits feed into broader assessments of dollar strength. We've got US housing starts data coming in today, which measures the number of new residential construction projects that break ground each month. It's a key indicator of consumer confidence and economic health, so let's break down what we're expecting. The forecast is calling for 1.31 million starts, up from the previous 1.18 million, which would signal stronger construction activity. However, this is marked as a low-impact event, so we're likely looking at mild and brief market reaction rather than any major directional moves. The greenback may see some modest strength if the data comes in hot, but don't expect fireworks. Euro-dollar will likely be your most responsive pair today, as it's the most actively traded and sensitive to US economic surprises. We're looking at the import prices report for the month, which measures the cost of goods coming into the United States. This data helps us understand inflationary pressures from abroad and can influence how traders view the dollar's strength. We're expecting a decline of 0.7% month over month, a significant pullback from the previous month's 1.9% increase. This suggests import costs are cooling, which could ease some inflation concerns. Since this is a low-impact release, we shouldn't expect dramatic volatility, but it may provide context for broader dollar sentiment. Euro-dollar will likely be the most reactive pair, as softer import inflation could shift expectations around Federal Reserve policy and dollar demand. We've got the capacity utilization rate coming in today, which measures how much of America's manufacturing and industrial potential is actually being used. It's a key indicator for understanding where the US economy stands in the business cycle. The forecast came in flat at 76.2%, matching the previous reading, which tells us industrial activity is holding steady without significant acceleration or slowdown. With low impact and no surprise in the data, we're likely looking at a muted market reaction, though traders will still be watching for any shifts in Fed rate expectations tied to broader economic momentum. Euro-dollar tends to be the most sensitive to US economic data surprises, so that's your pair to monitor if any unexpected volatility develops. Based on today's releases, the pairs most at risk of volatility this session are Euro-dollar and Euro-pound and Euro-yen. Here is a breakdown of why each pair is in focus. That wraps up the complete daily Forex News economic calendar breakdown. The key theme today is Euro data flows, US housing metrics in focus. Keep a close eye on the release times. A surprise deviation from forecast is often where the real moves happen. This is educational content only. Trade safely and manage your risk. That's your daily economic calendar rundown. Don't forget to like and subscribe for more Forex insights, and follow us on X at Forex Insight. See you tomorrow.